All right, so let's begin the show. Good morning, everyone. Thank you so much for joining us this Saturday morning. My name is Kanhiya, and I'm heading the admission and marketing at International College of Financial Planning. It's a part of Bajaj Capital Group. With absolute excitement, I welcome you to our exclusive webinar on smart financial planning for 2025. Build wealth, not worries. We are thrilled to introduce our star speaker, Mr. Rishi Narang, a true titan in the world of finance. With over 20 years of mastery in financial planning, investment research, and academia, armed with Master of Management Studies, specialization in finance from Mumbai University, and prestigious Certified Financial Planner certification from FBSB India. Having delivered over 300 plus electrifying webinars on financial planning and wealth management, Rishi knows how to make complex concepts easy to understand. Buckle up for an inspiring session that will transform the way you think about your money. Thank you so much, Rishi. Now the stage is yours.
Thank you so much, Kanaya, for inviting and for sharing such lovely words about me. I'm so honored and humbled to know this, and I wish that we have a very, very interesting session today with a lot of takeaways for our attendees, our guests, and also understanding about the CFP certification. So, friends, firstly, for let's say for around 30 minutes, we are going to discuss about the smart financial planning and what are the mistakes we do, what really happens all across the stream is based on my experience, and then how did I learn about these skill sets that I'm going to deliver to you? So we'll discuss about it. So I think it's going to be a fairly interesting session, 60 minutes or something. So just be glued to your screens and let's enjoy it. So let me just share my screen. Yes. Uh, is the presentation visible, Kanaya?
Yes, yes.
Yes. Okay. So friends, the topic that I chose for discussing today is smart financial planning for 2025. Friends, at the end of the day, it's all about that we have to make our money work for us so that we build wealth and not worries. Because friends, there are two aspects to things as I look at. One is if we do it the right fashion, we build wealth from what we earn. Or the other side is if we don't do it well, then we actually, get into stress, worries. We don't really understand what's going to happen tomorrow. How are we going to lead this life? It becomes a big, big challenge. And so this is a very, very important aspect that I thought I should deliver a webinar, a keynote on this today. So here we are. My first slide, friends. So I'm introducing two of my friends today to you. On the left side, I have Ajay, and on the right side, I have Vijay. So friends, all of us actually started at the same starting point in terms of when we finished our education, our masters, pretty much similar kind of work profile, same kind of salaries. But what you can see on the screen is Ajay is today financially, he's doing very well financially, right? Because he understood, that managing money and making it working for one is very, very critical. On the right side, we have Vijay, who, as like most of us, I did the same mistakes, friends, for the initial first 5 years when I had joined my first organization. That what's the point? We are earning money. This is one life that we have to lead. Who's going to look at tomorrow? Let's enjoy things today. So what happens then is it leads to different endings, right? So one on the left side, Ajay planned it all around his life, and on the other side, the person Vijay, he drifted. And many of us are actually on the second side because we drift. We seek immediate pleasures of life. So, friends, this is my key mantra here that in financial life, planning not earning determines who wins. It's not that I have seen so many cases. I do advices to people. It's not, I never go and say that you have to be rich so that I can make you wealthy. No. All I require is that you have to be disciplined. You have to be consistent. You have to understand my message, my communication, and what are we looking for. Right. So wealth can be created. Today in India, we are happy and we are very lucky, friends, that because of the global liberalization, India being right now almost at the center of the global, diktat today. So Indians are really, really earning very, very good packages. Right. So earning is good, but are we really turning wealthy? Not really. If you look at the number of millionaires, it's just a trickle. So what is the reason that the middle class is still a middle class, and they feel that a lot of things are actually impacting, which my next slide speaks about. That's because we are not really sensitized towards the mistakes that we make, and that's actually a kind of a life that we live like. Why am I debating again, re-emphasizing the point? Because friends, today it's very critical to discuss this point. Very, very critical, because we are in a financial flux. Stock markets are volatile. They're not really performing. We've seen this year again, they're not performing right. Inflation pressures. Globally, this has been a problem. And since when we have this inflation, that has actually become a big problem, headache for every economies after the COVID struck and post-COVID, when everything just opened up immediately. Right, the logistical structure of China was slow to come back on stream. And what has that also led to, which I have been speaking many times on this, is that in India, the central bank delayed reducing the repo rate because inflation was difficult to tackle. And that has actually impacted us. If you look at the last 2 quarters, we didn't really have a very good Diwali this year. I mean, in terms of the corporates, sales were down. 2 quarters are down. We are right now talking about, we used to talk about plus 7% GDP growth. Right now, we are talking about 6.5, because some impact has happened because of this inflation. Career volatility. Now, friends, AI is a thing that is one of the most discussed topic today is about AI and its impact on different industries. How is it going to happen? Will it have an impact on the career longevity? Yes. Are we really preparing ourselves for it? No. Longer lifespans, friends. I am a millennial myself. Millennials, people who were born in 80s and 90s, and the Gen Zs, we are expected, and we are going to live much longer than what our parents did, because of the improvement in healthcare, access to information, and a lot of things. Modern society, right? So if we are going to live longer, but our working age is the same, if the working age is same, so there is a big mismatch. Are we preparing for it? Not really. Not really. There was a survey done a few months back by one of the leading, I think it was Canara Bank with HSBC. 70% people said that no, we are uh, we are unsure, and we are very afraid of our retirements, because we don't think we have, or we are doing anything for generating that kind of funds. It's a big question. And on top of that, friends, we have the geopolitical tensions. There was an existing dispute already between Russia and Ukraine. Now, Mr. Trump, with his trade tariffs and nationalism in Europe and US, has again come and struck everybody. So trade tariffs are coming. Where is this world going to go? It's pretty chaotic today. Does it impact me as an investor, as a person who is working and plus he makes his investments? Yes. Are we preparing? We have to prepare, friends. We have to prepare ourselves. We have to do something, and that's the takeaway, friends, that you should take today. Let me go to the next slide now. The first question that I have is, why do we make financial mistakes? Everybody, guys, it's not everybody of us makes it. I have made it. I make it today also. But the idea is to quickly learn from it and then you get back on track. But why do we make it? Lack of financial education. Friends, our learning systems, when I was in school, we were not taught anything on finance. I learned about it when I went for my master's, but that was corporate finance. But when I was inclined to learn about personal finance, I had to pursue the certified financial planner program because our curriculums don't have it. My MBA curriculum at Nasim Munji didn't have it. Second major issue, friends, with everybody, including me, which I call it as keeping up with the Genesis, social pressure. You meet a friend of yours after 10 years, you see he's driving a Mercedes. Pressure. Wife says, see, where are you? You go and visit a relative, you see things at his house, you get back thinking, I should have a better car. No, I think I can afford it. I think we have a 2 BHK right now. Seems we should have a 3 BHK. Or maybe change the society. So, for example, I'm at a different place. I should get to a better society. On a lighter note, I want to mention this thing I heard from one of my colleagues sometime back was that the kid is not ready. He's very upset going back after summer vacations because everybody in the class, when the teacher asks this question, where did you travel this time? So everybody, when they talk about foreign vacations, the kid is upset that you took us to the village or you took us to some place in India. I'm not happy. Social pressures. And that can lead to a havoc in financial lives. Procrastination. We delay these decisions because, see, friends, I've seen it. We might be very good at our own skill sets. Somebody is a very top class IT engineer, writes beautiful codes, but money management is not something it is his forte. Somebody is, let's say, another person is a very top is a top government government servant, but money management skills are not there. And then, friends, also that we've seen psychologically, money has an impact on our emotions. 2023, 2024, when the stock markets in India were running ahead of valuations, overheated markets, small caps overheated. There were articles and articles and articles on this thing, but still the greed overtook logic. All of us continued, small cap is going to, it is giving 30% return, 40% returns. Let's continue with that. Let's ride the boat. Let's not get off of it. And then we see, so today, if I look at this year, it's down almost 15%. That is greed in fear. So financial management, financial planning is not at all. We have to keep emotions aside. It's a serious business. It's going to impact our lives, your lives. So let's now come to the first mistake that we make, which I call it as the budgeting mishaps, the budgeting blindness. See, friends, I might be earning 2 lakh rupees a month, but then I'm doing very well right now. I'm meeting every requirements of my kids, my wife. I'm doing so well. We are so happy. But I'm not actually I'm ignoring where my money is going. Big mistake. I'm not tracking my spendings. Small spendings, friends, at times actually can really impact the money that's left for saving or investment. So to give you a thumb rule, friends, today is that what you should do is just plan it this way is that at least I would say it's a good number, but I would still say I'm a little more greedy on this. So at least 25 to 30% of your gross income, I'm saying gross, it's not post taxes, should be set aside for investments. That's required. If you do that, that's our experience, then you are going to be reasonably comfortable across. That's kind of a thumb rule you can take away from me today. That's point number one. Living beyond your means. Again, friends, it's easy to live the life today, to show a place in this society. That's very, very important. But it should not impact my future. If I'm buying things today on the behest of that, okay, fine, I'll give you a share of my future earnings, I'm actually putting my future on stake. Because I'm assuming today that, yes, I'm here, I'm taking this, I'm living beyond my means today. I'll live for the next 40 years. Who knows? Life is uncertain. Planning has to be there. Maybe the person is the only breadwinner of the house. So there's a lot of on stake. The third thing, friends, which I also get into that at times, friends, very, very clearly, we all do it, is impulse buying, emotional spending. Array, I'm a little sad. Let's go to the mall. Let's do some shopping. We have all the best brands of the world today. Zara. Okay, it's a good brand, but not every time Zara. I don't think I will afford it. So retail therapy is good. The psychologists say go, spend, enjoy. But on the other side, the money managers say, or the financial managers say, let's look at it. Let's not overboard on that. Then two very, very important aspects, friends, that I find at times in Indian households is, one is they don't have an adequate emergency fund. That's not there. So why do we require an emergency fund? That's because you never know, life is uncertain. Jobs can go, AI is coming. So I should have few months of money with me so that, I can pass through. I will not get into an immediate panic mode. So then we should have around 3 to 6 months. I take 6 months, but that's the way the industry looks at it, of living expenses and safe investments, liquid investments, savings accounts, where I can get this money. Now, people or families who had this emergency fund at the time of COVID, again, different outcomes. They were planned because they had money. They had emergency funds with them. Right? And then the second part is, which I see in India, is heavily, heavily underinsured. Penetration rates, I think for life I was looking, it's only 4%. We don't really have it. We think that, okay, fine, even if I'm telling you that, my firm, my company has provided me reasonable insurance, but that's not adequate. That is not at all adequate, sir. Trust me on that. Health inflation is huge. It's more than 13% right now. One of the most expensive thing. So if I have to give you another takeaways over here, in terms of life insurance, you should have minimum 20x of your annualized income. Minimum 20x. So if you're earning 10 lakhs, then minimum kind of a life insurance you should go with is roughly around 2 crores. Right? Because that's required. Your goals, your family's goals and aspirations are linked. When it comes to health insurance, 2 to 3 times of annualized income is good. Right? So these are the takeaways that you can take today. Then, friends, let's talk about mistake 2, investment mistakes, investing mistakes that we make. Now, friends, please understand, when I speak to people, clients, on webinars, on social media, so every time I see that most of us have built their investment strategy on myths and misconceptions. So if the pillars are on myths and misconceptions, then the train is not going to go where you want it to go, because it's going to a different direction. It started on a wrong foot, it is going to end at a wrong foot, or it will take extreme amount of energy to get back it in shape. So what are the common myths that you have? You need a lot of money to start investing. Absolutely wrong. I require discipline. I require discipline and time. You're young. I'll show you a figure. You'll be so surprised to see it. after a few slides. You must be an expert to invest, not really. To become an expert, it takes years of practice. So what I require is I want you bring your money. We'll give it or we will give it to the experts. The experts are to, their focus is to manage money. Right. So it's not required that everybody who's investing today has to be an expert. No. Investing is like gambling, certainly not. There is risk, yes, but every business has a risk. So we have to understand the risks and develop a strategy behind it then. It's too late to start investing. Sorry, sir. Procrastination, delaying things, because my mind tells me I can't do it. I'm telling you don't need to do it. You just have to learn the tricks and it will automatically come to you. You will start questioning your strategies or your way of behaving or reacting to money and finance. Stock market is too risky, sir. It has its own pattern. It is based on emotions. And there are factors. Now, if the valuation is too expensive for the Indian market, no, despite the fact India is the only one of the only destinations to be for any investor and for any company, but still it is expensive. Hold back. You can get rich through quick investing, guys. This is out of this place. Let's get this takeaway also, that there is no quick money making in finance. Please, there are some things, elements that are required. You need time, you need discipline, and you need a strategy behind it. If somebody comes today and tells me, I'll give you 25% returns every year, you give me even 10,000, I will not give him. I'm okay with my strategy. Because I know that 25% CAGR or annualized return is a dream. He might be able to give me for 1 year, 2 years, but the third year itself his business is going to mismatch because you don't really have such a consistent. Bitcoins is given. Bitcoin as an asset. If you look at Bitcoin, 100% returns, that's okay. But is it consistent? I look at consistency. It's not there. So these are myths. Let's not build our investment strategy on myths and misconceptions. Now, this slide is very, very interesting, friends. It talks about, and you can take a pic of this slide because this is, if you take this, incorporate this in your investment strategy, you will certainly be better after this presentation. So firstly, friends, that we see is, as I was mentioning to you, I've done it myself. You're earning a lot, but I don't have a direction where my money has to go. At the age of 27, 28, I was earning very, very well, but I'm not married. I'm not this. Okay, fine. Enjoying peaceful, chill out, going to vacations, but there's no planning. Dad used to ask, what is the future? What is, it's okay. I'm too young to do anything. I'll think about it after 30. So the first thing that everybody of us today has to do is to have some clear investment goals. What are the top things that we want to do in life? It should also include today, if I have to say it, the trend says I have to put an X amount of corpus also for my upskilling because that's required. The world is too dynamic. I can't be static. I'll be out of the market very quickly. Right? So clear investment goals, housing, children education, vacation, cord retirement, another investment corpus, let's say, or maybe I want to start a business. So when only I have these investment goals, then I can design a strategy. You guys can design a strategy behind it. Like, for example, if I want to have, let's say, 20 lakh rupees for a down payment of a house in the next 2 years, I can't put it in equities because if the markets go like this down, I will not even have the time to recover my money back. Failed strategy, sir. So goal settings is going to be the starting point. And then lack of portfolio diversification. People at times tell me, I am totally invested in real estate. That's the best. It's given me fabulous returns. I'm in a particular part of the geography, sir. How can you be dependent? The portfolio requires diversification. If I need funds in 2 years, can I invest in real estate? You never know. The market becomes so illiquid. During the COVID, it happened. Nobody was able to pay money, not buy anything. And then based on the goals, my portfolio should be diversified. I'll show you that, but just trying to explain it. So very clear points that I want to mention today is when you talk about equities, it is the growth engine of your portfolio, of your financial life, friends. And that engine needs to be there. Should it be 100%? No. Should it be 80%? Depends on your risk profiling, on your risk tolerance. Ignoring inflation. We don't really look at inflation. I mean, before, trust me on this, friends, when before my CFP, I was a corporate employee, corporate finance, but was inflation? No. I'm getting a hike every year, so it's okay. But we have to incorporate inflation. Inflation is going to impact the first green, that financial goals that you made. It is going to impact that. The money requirement will change because money loses value. India's trend today is, for the last decade that we've seen, 6% is the average, 5 to 6% tops inflation that is going. Right. Impatience and time in the market. Very bad strategy. We are like a headless chicken. We follow what the financial news systems tells me. The markets are up, put, sell other assets and invest. Are you entering the right point? Maybe not. And when the stock market starts falling, panic. You must be reading the news. I read the news that SIPs, people are stopping the SIPs because they were in direct moves. They were taking the benefit of, let's say, an apps. That's right, but no strategy behind it. Now, when the markets are falling, equities are going to perform like that in the short while. They will be volatile. Am I worried? No. Are my clients worried? No. It is going to be, but we have this. But if equities are aligned, the growth engine is aligned for my long-term goals, I will always recover back. 2-3 years is a good time to recover. That's the evidence that I have. Investing based on tips and herd mentality. So out of the bracket, please. One of the earliest investments I made in one company, Videocon Industries, was told by my friend. Did I really look into it whether that was a good company? Nothing against the company, but that's been there. It has not been it's not been a financially or maybe a shareholder value creation company. They got bankrupt, they got delisted, and things. I went for that because I thought, okay, he is my friend, he earns a lot of money, he's giving me a tip, let me take it. So no. And the final nail in the coffin is, I'll tell you a thing, I still get into that mode, but then after a few days, I realized that I overcome it. It is always a journey. What is that? When the stock market start falling, we stop looking at the financial channels because that is stressful. That's good. But we also stop looking at the portfolios. Arey, forget about it, yaar. ICICI Direct. No, I'm not going to look at it. Arey, it gives me stress. No, it just ruins my day. That's the point. So what it requires is that we have to review our portfolios. In 2024, when the small cap stocks were very high, maybe that could have destabilized my portfolio. Let's say based on my risk profile or risk tolerance, maybe 60% or lifestyle investing, 60% in equities is tops. Maybe it went up to 75%. So what I should have done is I should have rebalanced my portfolio. And that is required. Right? But we don't do it because we just get overboarded. We get emotional. It's not about being emotional. I remember calling clients that fine, it's overheated. Let's reduce the stakes. Arey, what has happened to you? You don't want me to earn money when everybody else is earning? So that's the question. Now, on this slide, I just want to explain this very important aspect, friends, is on the left-hand side that you see, there's a table. So this table is an evidence from the Indian markets of the last 30 years. So it says that it is comparing equity with precious metals and fixed income, which is your PPFs and FD. So equities have given us 14.3%. If you look at it, Sensex, if I look at it, 14.3% annualized return over the last 30 years. So yes, equity is an asset class which gives a return more than inflation, right? But as I said, I need everything in it. I also need gold in my portfolio because that's a hedge. Multi-asset funds today are doing wonderfully because it has an element of gold and fixed income. It's not too aggressive, right? But on the right hand side that I'm trying to show you now is this. This is a table I took from ET Wealth. What does it show? That despite I might have done, friends, a superb asset allocation. That equity is itna, fixed income itna, and gold itna, and real estate maybe one house and or maybe two houses, and that's good enough, not more than that. But then we have to diversify. If within equities also, if you look at 2023-24, small caps the best. So if I'm only riding on the small cap bull, then in 2025, sir, I'm down 15% on my portfolio of small caps. So I have to diversify small caps, large caps, mid caps, right? So within asset allocation, also diversification is extremely, extremely important. We don't do that. We don't really have a strategy. So it is all going to take back to you. How will I make this strategies? By going back on the table and looking at the goals that I have. If I'm looking at a retirement corpus, if I put everything in fixed income, sir, I will not reach that kind of a corpus. So I have to have an element of equity. Can I take an exposure to small caps? Yes. Why not? Because today I am 40, I have another 20 years. We look at it, right? But if I need, let's say, a funds, as I said, in 2 years, and when I was writing the small cap, yeah, this is going to give me superb return. So I'm down 15% already, and I don't know where these small caps are headed. So diversification is also equally important. You learn these tricks, you learn these money management principles. They're very, very critical for us to be all are earning very well today, friends. But it says that we are not really managing our money. Our money is not really working in our favor. Retirement neglect is the third mistake, friends. That's because delaying retirement savings, underestimating post-retirement expenses, our longevities, I already explained, inflation, again, a big problem. Relying solely on employer benefits, sir, that will not take you because the EPFs and maybe the EPFs of the world and the PPFs of the world are only fixed income debt products. They're only going to cover inflation, not more than that. But what happens to the maybe, for example, if I want to give you a thumb rule, somebody who's, let's say, earning 1 lakh rupees per month today needs a corpus of roughly around 3 crores to really lead a good retired life, right? So if you're dependent only on the EPFs and PPFs of the world, that's not going to happen. And lack of diversification. Retirement corpus is only in fixed income, sir. It's a failed strategy. Equity element has to come in it. But if you are 55 right now, and then you say, okay, fine, now let me put whatever corpus, little corpus or something I have, and then I want to put in equity, sir, then the strategy might be different. And on the left-hand side, friends, I've mentioned one very, very important point here. Retirement isn't an age, it's a number. What does it mean? I'm putting the hard-hitting fact here. 60 is not a number, sir. Trust me on that. You should retire when you have sufficient funds. It could be 65, it could even be 55. Fire, financially independent, retire early. That is possible. But the only requirement would be that you are sufficient to lead your life well after that 55 years of age. Right. So let's look at one quickly that I would mention here, again, bringing Ajay and Vijay. So let's say Ajay starts at 25 and Vijay starts at 35. Both of them require this 3 crore ka retirement corpus at the age of 60. Now, if you look at numbers, I just took a very plain vanilla system whereby 12% is the per annum return I look at. So Ajay only needs to invest 5443 every month. Power of compounding, disciplined, starts at age 25. And Vijay, on the other hand, friends, needs to invest 17,600. That is more than 3 times. because there is a delay of 10 years. So we have to start early and we have to be disciplined. The next and the last mistake that we make is bad debt decisions, friends. We use debt to finance luxury, depreciating assets, failed strategy. You're taking a lot of credit card loan, high interest, 30 to 40% roughly. Bad strategy. I'm making investment, but I'm also paying high interest on credit card. Wrong strategy. Right? And then finally, we ignore credit score monitoring. Friends, that's very, very important because the future you might not be able to get a loan at a decent interest rate because the credit score has been impacted. It impacts the eligibility. Just 1 second. I think Twinkle wanted me to show the previous slide. Twinkle, it is here. You can quickly take a pic before I move forward, please. Okay. Okay, thank you. So debt management, again, friends, is extremely important for all of us. Right? Access to leverage today, access to loans is so easy these days. That's required for an economy to grow. Right? But it should not work against me. The winning mindset, friends, is key takeaways that I want to give you for 2025 and beyond. Avoid toxic debt. Anything where you have to pay more than 10% interest, try to reduce it. It could be personal loans, it could be credit card debt. Just be careful with that. Should have a budget. Start investing. Have proper insurance coverages. Retirement is key, important for us as millennials and Gen Zs. And invest in financial skills. That's important. We as a society are not trained, sir, but we need it today. That's a big, big requirement. So, best time to plan or start investing was yesterday. The next best is today. So, that's my final point here. What will you choose? You should prioritize savings investments. You should think that every rupee that you earn should work for you. So I hope, friends, you've got good takeaways, good thought process. I learned a lot about this concept in the Certified Financial Planning Program. So, friends, let me now give you some idea about the Certified Financial Planning Program. Friends, this is the world's gold standard when it comes to personal finance. This is the best course. I also chose about it, that which course should I pursue. So that was the search I found about it. It's a US based course. The uniqueness about this course is that it is recognized in 28 territories, the major economies of the world. It's a unique 4-in-1 certification program, ideal for people who want to join jobs be in the BFSI space, students, also for people, for there's so many of us who are working in the BFSI space with different years of experience. This doing a CFP adds credibility. It helps in mining clients, getting, improving on the trust metrics with clients, because clients start relying on you because they see the discussion has evolved from product and return chasing to now strategy and to design the life journey, financial life journey. This is personal finance focused. I'll show you the curriculum. You will understand, friends. Typically, it takes 6 to 12 months to complete. How does it happen? It's in the next slide. Friends, eligibility, they've not been very, very strict with this. It is 10 plus 2, right? And 18 plus years of age for in terms of streams or percentages. Now, when it comes to the hard skills, there are 4 levels I was mentioning in the regular pathway. In the regular pathway, we have 4 levels. Level 1 is about investment planning specialist. The modules are personal financial management, which is all about the things I mentioned today. This is part of PFM. How do you manage the money? How do you do debt management? How do you really try to understand the myths and misconceptions and things. And then, of course, I also took on asset allocation and portfolio rebalancing from the investment planning asset management module, where we are going to explain you and inculcate you with all the leading asset classes. What is their behavior? How do they perform? What is the historics behind it? Right? Something on investor psychology, risk, portfolio rebalancing, portfolio strategy. So there's a lot coming in store there. Friends, in the third module, regulatory environment, BFSI is a regulatory space. So absolute clarity so that it reflects, when CFPs go for taking jobs, the 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 interviewer on the other side is very clear that I'm talking to someone who is extremely clear on the regulatory aspects. Right. When it comes to CFP level 2, which is retirement and tax planning specialist, friends, there are two modules. As I was explaining to you, retirement is the most important goal for all of us. Today, we might not be able to foresee it, but it is there. We have to get retired. Second is tax planning, friends. In case of tax planning, all the 5 heads of income, salary, house property, capital gains, big, because in investments, we will make some gains and we'll make losses. How do we really treat them? What are the taxes we have to pay? What strategies I can evolve? It's very interesting. Also about international concepts, IFRS, GAAP, financial taxation, international taxation. Coming to CFP level 3, which is risk and estate planning. Friends, risk planning is about insurance. I gave you a couple of thumb rules, but that is not technically sound because we have to incorporate the individualist aspects of different families, different clients. No two families, no two clients are same. Right? Estate planning is about succession planning. It's a subject we don't really have it in any of the Indian curriculums. This is about all the wealth that the families or people have generated. How are you going to plan it to be passed to the next generation? How smooth we can make it? Yes, we can do that. We have all the tools behind it. We can do it. Then comes the CFP final exam, friends, which is about yes, Rashmi, I'll cover it. Just give me a minute before I come to that. Now, coming to the CFP final certified. So in this, friends, we have to, there are two aspects. One is we have to submit a financial plan to the board for approval, and then there is a final exam. Okay, so this is about the regular pathway I just explained. So let me go to the next slide. Yes, 1 second, please. What are the career opportunities for CFP professionals, friends? You can see on the screen wealth management, private banking, portfolio management, insurance companies, financial product designing, fintechs. You have a technical background, you CFP, you are very eligible to be hired by a fintech. Right? Financial advisories, fund management, retirement planning, succession planning, financial planner firms can hire you. The entire BFSI space, you can be employable at any of the companies. It is so flexible. Now coming to why International College of Financial Planning. Friends, ICOFP is the learning vertical of Bajaj Capital. I'm sure you are aware of Bajaj Capital as one of the premium financial services company in India. In fact, the CFP certification was brought to India by Bajaj Capital and ICFP way back in 2002. Right. So ICFP has been, the top educator for CFP since last more than 2 decades now. The most experienced qualified faculties are at ICFP. We have close to 35 faculties with us. Everybody is minimum a CFP, that's requirement. And then again, the collective teaching experience is more than 130 years. Highest number of CFPs are ICFP alumni. In fact, we had a session yesterday, just to let you know, we had a session yesterday with one of our alumni. She is right now, she's a thought leader today on retirement planning, on various respective boards of SEBI. She's frequently visiting the Bombay headquarters of SEBI for discussion on financial planning. How does the financial planner community in India evolve? So very proud, alumni of ICFP. We have consistent record. Most of the people today in thought leaders in financial planning, personal finance space, in BFSI are ICFP alumni. Friends, this slide just gives you a brief about the few faculties that we have. I've given a list of 8 here. Very, very dynamic people coming from the industry and academia are here to support the CFP education at ICFP. Friends, Ms. Madhu Sinha is our D, and she won the best educator of the year award last year from the Financial Planning Standards Board, which is the parent board of CFP globally. So that's the recognition, that's the kind of experience that you see at ICFP. What are the study options available, friends? You can typically right now, friends, we have CFP is delivered online on Zoom. You can join a weekday batch. Of course, that's going to happen in the evening, or you can go for the weekend batch, which is on Saturday, Sunday, evening 7 or 7:30. And then in the morning, it could be early morning or maybe by 11:30 to 1:30 timings. The other aspect, friends, we also feel at times is that yes, people are, they can't really commit to a time. So why not they pursue CFP at their own free will? So for that, friends, the other approach that we have is known as the e-learning module, whereby you will get access to the same content, but recorded in a studio by the same faculties and then accessible to you via even your mobile or through an app at your own convenience. India's most comprehensive CFP study material is provided by ICOFP. In fact, just to let you know, friends, the history says that when FPSB came to India, they didn't have an Indian content, CFP content. So it was ICFP's, faculties, including Ms. Madhu Sinha, the dean, who actually prepared this modules for the Indian content on how it should be evolved as per the Indian requirements. So we are the pioneers in drafting these books. You will get books, you will get the workbooks and concept books for every module. We've got good projects. You get access to our state of the learning, the state of the art LMS learning management system. Then you will be on sequential learning in terms of different mocks and quizzes over your journey. Friends, also as a differentiator, we provide personalized mentorship. And who are these mentors? They are the ICFP alumni only who've cleared their CFPs recently, and they are passionate about, continuing that value system to the next set of candidates at ICFP. Friends, now coming to the fee for FPSP. Yes. Fee for FPSP, friends. For the regular pathway, friends, the FPSP fees is as follows. Firstly, there's a registration fee of 18,000 rupees for registering the candidate. Then, friends, FPSB, the parent board, has made it compulsory to buy the e-books. So that means, but it doesn't need to go together 32,500. It has to be in stages. Let's say I'm in level 1, so I only have to pay them 6,500 right now and prepare for the first level. And for the CFP final, friends, the fee is 13,000 rupees. Coming to the FPSP exam, of course, when I study for a level, I have to clear, it's a regular pathway, I have to clear 4 exams. So the fee for level 1 to 3 is 6,750. For the final level, it is 13,000. I had already mentioned to you, friends, about a financial plan assessment case study that has to be submitted to board. The fee for that is 10,500 rupees, right? And after that, friends, when once I clear some exam, once I clear a level, I can go for a specialist certification. The collective fee for all the 3 levels is 10,500. Now, friends, I think I've asked this question about the CFP fast track. I was mentioning, I've given you everything about the regular pathway where there are 4 levels. The FPSB board and the CFP program in India also has a fast track pathway where a person, an individual can complete the CFP certification in 4 to 6 months. Yes, that's possible. Because in the case of fast track pathway, you will only have to go with the 2 elements of the final level, which is submit the financial plan and pursue and appear for the final examination. But the FPSB board requires some some education eligibility and an experience eligibility is required. So which is, if I have to start it, somebody who's a CFA, who's let's say a chartered accountant from ICA, or maybe he's a ACCA, CMA, or let's say a fellow member of the Insurance Institute of India, or anyone who is, a master's. Now, they've not really put a restriction in terms of if you're a master's or you're an MBA or PhD in any stream, you are eligible. In terms of experience, the requirement is that yes, 3 years of prior year in experience in the BFSI space is required. So if you meet these two criteria, you are certainly eligible to go for the fast track mode, whereby you will only have to do all the requisites for the final level and appear for the final exam, and you get your certification. If you can look at it, friends, I have also provided here the USP of the icofp FT program. We provide you 52 hours of module, because you've not studied 3 levels. We'll give you more than 50 hours of training on that. Then comes the training on the project. Then comes the final level exams. Plus, as I was mentioning, you have a personalized mentor available in the CFP final to just give you that kind of a hand holding and push for the final level. So complete USP of ICOFP. Let me now go to the FPSB board fee for fast track. Friends, there's a validation fee of 5,000 rupees that the board charges to check your documents and things. Then, friends, there is a registration plus content fee. So they take it combined as 34,000 rupees. And after that, friends, it's the same, which is financial plan assessment, same as regular 10,500. Final exam fee, same as regular 13,000, and the certification fee of 10,500. Now, friends, now I'm going to discuss about the study fees of ICUFP. Friends, for the regular pathway, where I gave you two verticals. One is the virtual learning, whereby faculty comes in, you come on Zoom session. These are live recorded, live sessions, basically, instructor-led interactive sessions. The combined fee is 60,000 rupees for the program of ICUFP. When it comes to the e-learning mode, which I said, no commitments, access at your on-demand access to the curriculum. For that, friends, the fee in the regular pathway for all the 4 levels is 45,000 rupees. Next, friends, when it comes to fast track pathway, where I said straight away, but you have to have the eligibility experience, the fee that we charge is 45,000 rupees. So, friends, you have to pay 10,000 rupees and you can start your learning. There is loan option is available through our NBFC partners, which you can certainly avail. And you can contact our sales counselors today for all the requirements there. Now, what is the offer for the today, friends? There's a flat discount of 1,500 rupees on the CFP fee. So you want to you want to go for, let's say, the virtual e-learning of fast track, flat discount 1,500 rupees. Also, friends, we will provide you with the discount coupons of 16 to 50 for so that you save money on save almost up to 50% of money when you buy the FPSB e-learning content. But this is for the regular pathways, basically, both virtual as well as e-learning. Then, friends, along with this today, we are bringing you two more valuable editions. One is the 15 hours of NISM 5-way e-learning videos, which normally goes for 5,000. It's coming to you free. Second is again 7 hours of premium recorded lectures on how to understand stock market trading. That again is worth 5,000, but that's coming as a free offer for the day. So there are four key elements of the offer today, and I hope you take the advantage. You should make your mind about joining CFP, because everything that I discussed, friends, today about money management, this I only learned it in this program because it is unique. These aspects we're not trained from our schooling days. We don't really also discuss, except few aspects, but we are not really that well also communicated on this. Right. And if somebody feels today that you can learn about it from, let's say, do it DIY, or maybe learn about it from the internet, there's too much of information. And friends, there's too much of wrong information also, because the person who's writing, he in most cases is not even a CFP. So even if I'm reading from an article or some kind of a update from a CFP, that is still credible and technically credible. So if I'm reading wrong, then my results might also be wrong. So we have to be, we have to upgrade our skills on financial planning. It can lead to good careers. It can even help me make, efficient. I can manage my money that well. So friends, again, there is one final thing that I just wanted to add, which is that in the regular pathway, once you complete your CFP, I had shown you that there is a certification fee for 10,500. Today, if you join this 10,500, the first year's certification fee will be on icofp. So this is again something that you should note down, that yes, once you clear the CFP, icofp is going to reimburse your certification fee. That's also part of the offer for the day, a special part of the offer, in fact. So friends, uh, if you join today, you're going to save roughly around 28,000 rupees, which is a big deal. You can go with a 0% interest loan, but you have to pay 10,000 first, and then this can come in 6 easy EMIs. So friends, the number, the way you can call up is 9711437779. Christian and his team is available today to answer your queries, but we are also there. I'll answer all your queries that you have today with respect to CFP and your aspirations. So we'll do that. In case you still have some questions, you can straight away definitely note down these numbers. You can take a pic of it. Please call up Krishan and his team, and they are available today, the entire day, to guide you on your, on your career pathways as well. Okay, so Kinaya, I'm done with my presentation. We can take up questions as you would like to go.
So, I see a couple of questions I can see in the chat also. Uh, can you please take those questions?
Sure.
Second, friends, if you have any question, you can raise your hand. I can see one raised hand by Twinkle Ji. You can raise your hand and I'll unmute you one by one. You can ask your question directly from DC sir.
Okay, so should we first answer the chat questions, Kanaya, or you want to first bring in
I'm
Twinkle?
just replying on the chat. By the time you take the questions from the students,
Okay,
participants.
okay.
Twinkle Ji, you
So
can
I'm just
unmute yourself.
starting. Yeah, I'm starting with the last question, and I'll take it. Don't worry, guys. I'll have all the questions answered today. So are books available for purchase? Yes, Rahul, that's going to be part of the package. So if you take the package, all the concept and the workbooks that ICF for every module is going to come from ICFP. But the e-learning books of FPSB, that is separately that I showed you, and the board mandates that we have to buy those books as well. Kamal writes, I'm a postgrad in science. From science, is it required to do articleship for complete CFP or not? How long will it take to complete CFP? See, Kamal, it depends, because I've seen usually we'll have to look at it that you are a postgraduate from science background. It the requirement from my end is that where are you working at the moment? If you're working with a BFSI company in the domain, then we can assess it. But uh, otherwise, then we will be completely available to you in terms of providing you that 1 year of flexible articleship. So, like for example, just to let you know, I have one person from Hyderabad who is doing it. So I'm in Delhi, but he's doing it flexibly for me from Hyderabad, and it's going wonderful because I'm not putting too much pressure on him. We're trying to balance this out. So that's available. But Kamal, again, it depends. Your experience, where do you stand? And then you can discuss it with my team today. Yeah, that's okay. Just give a call to Krishan and his team, and they're going to take it. I Then I think Rashmi says, have they put any percentage limit on master's degree? You should at least clear it, right? 50% to hona hi chahiye, Rashmi, and that's, I think, is good enough. Uh, then I think Surya Prakash, please. Acha, that to I think. What about placements? Harsha has a question. Harsha Vardhan, what about placements? Harsha, trust me on this. If you would have done your, or your, let's say, CFP today, I have requirements open vacancies with me, but I don't have people to place because at times the requirement is in, let's say, NCR, and I have people available from Mumbai. They say, no, we don't want to travel. Can you get something to Mumbai? So that's the point. The CFPs today are only not more than 3,000, 3,200, right? Precisely. And the requirement is huge. Just look at it. Insight, Rashmi, I think I've already given in terms of eligibility and syllabus, so you have it there. Uh, right. So then I think
Hello.
Twink, Twinkle says, my question is the offer is not available after this. I want to enroll, but in next month. So, Twinkle, what you can do is you can make the initial payment today so that you can block it. You can always join a new batch, but the offer is interesting. You should not miss that today, right? Bharti is asking, does this course include use of AI in trading investments? Nahi, Bharti, not really trading and investment AI usage, but of course, some elements of AI will be discussed, but more from the financial planning perspective and not from trading perspective,
So
right?
how can we,
Yes, so I
like
think we can
how
now
can we
take,
solve the doubt through e-learning process?
yeah,
So
that's a
let's
good
take some
question.
questions. Yes,
Yeah,
Rajesh,
yeah.
you can go ahead.
I think somebody was asking about the e-learning doubts clearance things, right?
Yes, sir.
Who's this? Sorry, is it Raj?
Rajkumar.
Okay, hi. Good afternoon, Raj. So what happens typically, just to give you a perspective of how do we look at e-learning, for us, there is no distinction between a candidate that comes from e-learning or regular. It's all the same. So what happens is that apart from the access to access to the recordings that you have on the LMS, every month we are going to have some sessions from the core faculties on the respective modules. So let's, for example, if you're preparing for level one, where there are two key modules of investment planning and PFM, right? So you will have core faculties doing 1 to 2 sessions every month on, on explaining concepts, on explaining or solving your doubts. So that is part of the practice, and this typically happens, after the 25th of the month to, let's say, the 5th of the month. So we have a bracket of roughly around 8 to 10 days to have these 3 or 4 sessions every month. That's going to happen. Along with it, Rajkumar, we have this every Wednesday evening, we have a town hall. So the town hall is to solve queries from every pathway. So e-learn, and we also have certain, at times we also have specific town halls for e-learning. So there you can come, you can solve your doubts and be back on track. And of course, at ICFP, we don't restrict. You can always give, you can call up the faculties and then discuss the strategy. So we will be after you to finish your curriculum as soon as possible.
Great, sir. Great.
Yeah. Okay. So should we take the next questions from chat, Kneha?
Uh, Prasadji, you can unmute yourself. You can ask your question.
As loan facilities available, sir.
Yes.
Yes.
तो क्या करना पड़ेगा उसके लिए?
सर इनिशियली आपको 10,000 से इनरोलमेंट करना होगा, और जो लोन का है वो डेट विल बी अवेलेबल ऑन द आईसीएपी फी. द बोर्ड फी यू हैव टू पे स्टेप बाय योरसेल्फ टू द डायरेक्टली.
बोर्ड फी पे कर दी मैंने. ये नंबर पे फोन करूंगा मैं?
राइट राइट राइट, आप इस पे कॉल करेंगे, आपको सब बता देंगे. नाइन
चलेगा.
सेवन 43779.
Should we take the next questions from the chat, right?
Yes, yes, yes.
Okay. So coming back to the chat, friends. Yeah. So uh, I think I've answered Bharti. This is done. Ajay Parihar. Is articleship mandatory at a regular path? If not, who can have exemption? No, Ajit Parihar ji, 3 years of BFSI experience. If that is there, you don't require a kind of an articleship. You can, so if you are part of from the BFSI, that's not required. So as I again said, just give a call to the team at 9711437779, and they're going to give you the straight answer there, because they will ask you certain details of yours, and that's good. Bharti, yes, you can join fast track immediately. That is good. Harsh, Sir, I've also had 2 years of experience supervised 1 year or unsupervised 3 years can give you. Yes, so that's what I said now that if you are from the industry, if you have a work experience of 3 years, that's good. Else 1 year of supervised experience that I said can be hybrid, can be flexible. That is also good, but it has to be under a practicing CFP like me. Twinkle, yes, to book a seat. I can do it once I get my study. That's why I asked if offer it will be. Twinkle, can I just take a call on Twinkle's case because she wants to join a future batch, but just Christian, can you just look at Twinkle's case?
Sure.
Yeah, I have Philancy here. Hello, sir. Can I know more about fast track entry in terms of experience? I said 3 years. I am postgraduate in finance, specializing working in finance domain. Philancy Costa, you are definitely eligible for fast track. Just call the team and start the process and take the benefit of the offer today. Uh, then I think Bharti's replied something. I think if you're a BSc graduate, Bharti, then it's going to be regular pathway. Paridhi Bansal, I just finished 12th. When is the earliest I can give the exams and get my certification? Paridhi, the exams happen every month for level 1 to level 3. And for the final exams, that happens 6 times in a year. So every month in the third week of the month, you have the exams. So if you start preparing, you can be very, very quick with it. Right? We have Arpin. How can you help me with CFP final as I have 3 years experience so that in case I have to do prepare project? See, every kind of a guidance Arpan is going to be provided by CFP. We will handhold you to firstly prepare, let's say, for the final exam. Also, you have separate sessions happening for the financial plan, and then you go one-on-one with our dean. In fact, our dean is the one who handles, she with the most experience handles the financial plan construction. So then you have one-on-one Zoom meetings with her where you're going to submit the plan. She'll come back with some feedbacks. You'll make iteration changes, ultimately to the point where it becomes acceptable to for her, and then it can be submitted. So that handholding complete is when we're charging you, that's a package deal. It will have everything in it. What's the next question? Rakesh Sahu, I am a PSB employee. How will this certification be beneficial? Rakesh, the reality of the life today is that in PSP, public sector banks also, you have targets, you have to get some sales. In fact, you have to see that you are these days PSP banks are competing with the private sector banks, right? So then the CFP certification does couple of things. One is it adds credibility that you are a specialist in the personal finance space. Secondly, it helps to, as I said, to improve trust with clients. And this trust is going to help to increase their investments with you. So it's going to help you to mine more clients, to get more referrals, and really become someone who's dynamic, who's bringing good business for the bank, right? Let's say from the insurance side or from the mutual fund side. So that is very, very critical today, Rakesh. In fact, just to let you know, Rakesh, we have one of our alumni. I remembered on top of my mind. Uh, she is from Punjab. She is a trainer. She provides training to she is one of the PSB banks only. She's a trainer, I think, with Punjab National Bank, I think so. Yes, she's based out of somewhere in Punjab. She cleared her CFP in the month of February 2025. I asked her a reason why you did it. She said, I want to provide better trainings because there's too much competition. At times they ask this question that why shouldn't we outsource and why should we have trainers recruited? So she said that's a good point. And plus it adds credentials that I can also train even the senior most employees of the organization because I am technically sound on personal finance. So that was her post exam or post certification kind of an experience that you shared with us. Rajkumar, it's not about forex trading. No, financial planning is not about forex trading. Of course, foreign exchange in terms, yes, these are topics that are discussed, but not in terms of trading. Gursevak can help to switch from accounting to finance domain at the age of 45 plus. Gursevak, the point is that there are two aspects to it. One is that personal finance is an emerging business in India because there's too much of people are getting sensitized. So these kind of webinars that I do, the aim is to sensitize people also in terms of that. Yes, we have to be better at managing our money. And second thing is that Gursevak, it's also a plan B. I mean, for myself, when I did it, it was actually a plan B that, okay, after, let's say I get retired, or let's say I want to take a retirement at 55, what do I do next? I can become a personal finance, or maybe, I can become a financial planner. I can start my own firm. We are even Gursevak coming up with an entrepreneurship module that if somebody completes a CFP, how can he start his own firm? All the tricks from starting, what do you need in terms of marketing, in terms of sales, how do you get clients, how do you provide that kind of serviceability, how do you really set up a business? We will have that kind of a module also at ICFP shortly.
Rishi, I cannot see any answered left.
Okay, so
The one question I can see is this includes derivatives and AIF's learning.
derivatives is there, Prasanta. Derivatives, yes, it's there in investment planning. Understanding of AIFs is there. In fact, we will also have an understanding of SIFs also now, specialized investment funds, the ones where the minimum investment is 10 lakhs. Yes, that is also going to be included.
All right, so time to wind up the session, Rishi. Thank you so much.
Sure. So
Thank you so much, everyone, for joining this webinar. I hope we could have added some value to your knowledge. Thank you so much, Rishi. Signing off.
thank you. Thank you, everybody. Bye. All the best. Take the right decision. Thank you.
Prasanna, you can call on the number 9711 43 777 9. I'll just write down in the chat box 9711 43 777 9. Please copy this number and call on this number. My team is there. They'll explain you all the details. Thank you. Kamalji, yes, just talk to the counselor. They'll help you with the demo link also, class recordings also.